Hey everybody, it's Jimmy and Bill. Hope you guys are having a great day today. So today's video is about the 10 biggest mistakes people make when they go and buy a house. So it's really important, so stay till the end, because all of the mistakes are something that can make you regret buying the house. So before we get started, if you like this kind of content, do me a favor, subscribe and hit the bell notification so you're notified the next time we upload a video. So here we go. All right, Bill, let's keep tradition. Start us off with the first one.
All right, loan pre-approval. You got to get your loans pre-approved. So what you don't want to have happen is that you start looking at houses, and that's totally fine, but you get out there, you find one that you really, really love, and you're gonna put an offer in on it, and you're like, wait a second, I don't have a loan yet. You have to get a loan approval. And that can take a couple days sometimes. You're gonna have to get your documents together, you're gonna submit it to your lender, and then they're gonna give you an answer back. Now, don't get confused with loan pre-approval and loan pre-authorization. So you can put in some stuff on some of these websites out there, and you can get a loan authorization based on just what you say. Now, a loan pre-approval will be through a lender. You'll submit an application, and you're gonna submit all your documents, and they'll actually pull your credit and do a soft pull and get a baseline for you. And then they'll give you what's called a pre-approval letter that you're gonna submit with your offer.
Okay, so now let me put my 2 cents into that one. Where do they find a lender per se? Because there's some websites, basically you give them your information, then you're getting like 100 calls from different lenders because they just sell your information.
Exactly.
So what's the best avenue of finding a lender to give you a good approval? Should you use a broker?
Yeah, so your real estate agent will probably have a couple a couple mortgage brokers that they're used to working with, and they have a proven track record. You know, I've got them. I'm sure other agents have them as well. And they're people that I trust that are gonna get the deal done. Sometimes, you know, when you go to some of these online places, you're just a number. They don't, you know, it's a person that's answering the phone, working, you know, 9 to 5 per se. And, you know, they're getting paid whether you close the deal or not. You know, a broker is gonna get paid if you close the deal. So
right, and then basically they could tell you, hey, you're a good candidate for FHA or VA or just conventional.
Right.
So, all right, so that's a good one. So that's number one. Find a lender and get a pre-approval letter, not
a pre-authorization letter.
Not a pre-authorization letter. Okay, let's go on to number two. All right, here's one that I have. Ignoring the actual true cost of owning a home. I'm not talking about just, you know, the mortgage payment. I'm talking about what the taxes are going to be, especially what the insurance is going to be, especially here in Florida. You know, find out what the previous owners, what their average electric bill is, their average water bill is, and write it all down and figure out what your true output every month to live there is. Because you might be surprised and be like, oh, I was just thinking about the mortgage payment, but now you have to think about insurance, taxes, utilities, cable. What am I missing?
Actual cost of moving maybe, and just like a reoccurring expense would be making sure you're saving up money for maintenance. Not just things that break, but I mean just general maintenance of the house. You know, paint, pressure washing, things of that nature, plus having a little bit of a nest egg when things do break, because things will break. You're gonna need an air conditioner at some point. They don't last forever. You're gonna need a new roof at some point. They don't last forever. So just being able to put a couple $100 away, or $100 away, whatever, figure out your numbers, and how much life you've got left in your roof and your AC.
All right, so number two is true cost of home ownership. Think about that one, write it down. So let's go on to number three. All right, Bill, give me number three.
All right, not taking into consideration the neighborhood or area that your new property is in. And what I mean is, you know, what's the traffic patterns like when you're trying to leave to go to work or leave to go to the store?
Yeah, you're taking your life into your own hand, getting out of your neighborhood.
Right, there's a couple over on US 19 that, you know, it's great. You've got to come out of the neighborhood and you have to turn, you know, right or head north. but then you got to get across 4 lanes of traffic so that you can get to the next traffic light or 2, so you can do a U-turn to go the other direction. You know, just
yeah, that's a major highway for everybody that doesn't know, by us over here in Tarpon Springs, Clearwater area.
Yeah, and you know, it's sometimes it's those things that you kind of overlook because you see the house and you fall in love with the house, and you're like, oh, wait a second, noise levels, traffic patterns, you know, things like that.
Okay. So now let's go on to number 4. Number 4, and I can talk about this one because I am a licensed home inspector. Do not skip the home inspection.
No, do not.
Do not. I don't care if it's $500, $600, $700, $1,000. Do not skip it. And I'm not saying that because I'm a home inspector. Because if you skip it and then you move into the house and you realize that you missed something, like needing a new roof, a big problem with the electrical, big problem with the plumbing, something going on in the attic that could cost you $10,000, $15,000, $20,000. Let me give you an example. A few months ago, I did an inspection. Told the people to get a sewer scope, which means to scope out where the sewage line goes in from inside the house out to the street. Because there was a big oak tree. And I told them verbally, I told them in the report, I said everything. Did they do it? No. What they told me was that they ran the water for a while and it didn't back up. Okay, now the person that was living there was 2 people only. Now they moved in with 5 people. So they started using the bathrooms, everything started to get backed up, and now not only do you have to take down the oak tree, not only do they have to take down the oak tree that's $5,000 to take it down, but they have to jackhammer part of their garage to get to it. So anyways, at the end of the day, it's costing them almost 40 grand to fix.
Dang, that's a lot of money.
So if but they did get a home inspection, so you're gonna say, Jimmy, well, they got a home inspection. Yes, but part of this is not only get a home inspection, but take the advice of the home inspector. And don't grab any home inspector, look at their reviews, ask them how long they've been doing it. What do you have to add to this? Yeah,
penny wise and pound foolish. Don't, especially with our oak trees and those pipes, get a sewer scope for sure. It's money well spent. Best case scenario, there's nothing wrong and you spend a couple $100 extra. Worst, but you could have saved yourself in this case, you know, like thousands of dollars.
Yeah.
And, you know, walked away from the home before, you know, once you buy it, you own the problem.
Yeah, there's no way around it, so they're stuck. What's another one, Bill? We're on number 5, I think?
Yep, at number 5. All right. Number 5 is not sticking to your budget or not having a budget at all. So traditionally, I'll see sometimes people come in, they've got a budget of $500,000, $300,000, and they're pretty much sticking to it because they've run their numbers, they've got everything done, but then they see a house that they fall in love with. And they start creeping up a little bit and a little bit and a little bit more and a little bit more. And they start getting themselves a little overextended. Kind of goes back to some of our other videos. Just because you couldn't borrow that amount of money doesn't mean that you should borrow that amount of money.
Right.
So when you have a budget, I'm not saying that you don't have to increase your budget because you're like, hey, I'm just not finding what I like at the budget that I really, really wanted to stick at. Or, hey, this checks all of my boxes, this is why I'm going to go to it. Just make an informed decision about it, and don't just do it off of, you know, cosmetics. Yeah, so at the end of the day, you don't want to be house poor. No.
So that's the worst thing, because then you'll learn to regret it. It'll bring stress into your life, and that's the last thing you want. Is just don't do that. Don't become house poor. All right, so that was number 5. So now number 6. So this one is basically, don't fall in love with the house. Don't move into a house and say, oh, this is so beautiful, I want this house. This is the house for me, this is my forever house. A, it's not gonna be for your forever house probably.
Right.
So don't fall in love with the house. Don't get emotionally attached to the house. Run the numbers, have an inspection done, do everything that we talked about. Then if everything works out and then it works out exactly like you wanted it, and you could afford it, you won't be house poor, and then, okay, get a little bit emotionally involved. But until then, don't get emotionally involved.
Makes sense.
Okay.
No, I was just thinking about it. I'm like, yeah.
All right. Where are we? 7?
Yeah, I think we're at number 7.
All right, give me a 7.
All right, so when you're shopping for your mortgage, do that while you're shopping for your house. Don't be afraid to get a second or a third opinion on a mortgage when you're shopping around.
Yeah.
Whether you're using a broker or a regular bank, you want to make sure that you're comparing apples to apples when you're shopping. That's the biggest thing. So how many points are they charging you? Unfortunately, what I've seen from certain lenders is they'll say, hey, the interest rate, for an example, is 5%. And they didn't tell you that you had to pay 2 points for that 5%. So that's you paying some extra, several $1,000s extra to buy down your rate to that 5%. And then, but they're at another broker and they're not charging you any points to be at the same percentage. So just make sure you compare apples to apples when you're shopping around. And you know, a little healthy competition goes a long way sometimes.
Yeah, just tell one person or tell another bank, hey, they can get me this rate at this cost of closing. Can you match it or beat it or whatever?
Yeah.
So that's a really, really good one. All right, so we're now on number 8. Okay, number 8. Think about your future plans. You getting married, you know, or you're having more kids, or you're going to retire soon. Before buying a house, you know, don't buy a house that's not going to meet your needs in this short period of time, like say 2-3 years. You know, don't buy it. Or don't overdo it with a house because you're like, oh yeah, you know, I love this house, but it's just too much house because it's just you and your husband or you and your wife or partner, whatever. So, Bill, what do you think?
Yeah, I agree. You can overbuy and you can underbuy. If it's all you can afford, you know, and you underbuy a little bit because, you know, home ownership has its perks. You know, it's what you can afford right now. You can always sell it, you know, in 5, 6, 7 years, make some money on it, and then upgrade to the next property, right? There's nothing wrong with that. But Jimmy's right. You got to plan for the future a little bit. If you know some things are coming up, you know you're retiring, then, you know, maybe, you know, or you're going to have a family or you're going to start a family. You know, that's probably something you need to take into consideration before you buy a house. Yeah.
So just really consider your future plans. You know, think about 2 years down the line, 5 years down the line, 6 years down the line. What's the average person say in the house?
They 6, 7 years, but now they're saying it's about 10.
All right, so 10. Think about where you want to be 7 years from now. You know, like me and my wife are talking, and we're like, our house is too big for us, but for us, you know, the taxes are lower because we're a homestead, so it makes sense for us to stay, but it may not make sense for you to stay. So, all right, let's go on to number 9.
Okay, so number 9?
Yeah, 9.
9, all right. So, waiving contingencies. So, I guess what's a contingency? So, contingencies are kind of things like your inspection period, waiving an appraisal, as an example. Those are a couple.
If you're paying cash, I guess you could, right?
Yeah, you could if you were paying cash, but you know, and your realtor should be going over those things with you when about the benefits or the issues that waiving certain contingencies to the contract could be detrimental. So, for instance, let's say you waive your appraisal. You are, you know, buying cash, and you do care about the value of it, and you waive the appraisal. You have no other way out of the contract because you don't have a financing contingency in there because you're paying cash. So if you're really worried about the value of the house, then consider an appraisal. But just don't take contingencies lightly just to win, you know, an offer. And you know, there's other things that you can do to position yourself in a, you know, more strategically without waiving contingencies and still get contracts accepted.
That's a good one. All right, I'll bring it home. Number 10, don't rush everything we just talked about. Do not rush the process of buying a house, okay? Make sure, look at a lot of homes. Even if you found your dream house and you say, okay, this is the house, go to another 2 or 3 houses. Do some comparisons. Do not rush it. Do not rush it with the mortgages. Do not rush it with the inspections. Give yourself time to take care of all those things. All right, Bill, what do you have to add to that?
I agree. You know, don't rush the process. You know, you should enjoy it. Yes, it can be stressful, but you know, you really should enjoy the process. And you know, your realtor's there to help you make decisions, not push you in a direction. You know, but just don't get overwhelmed and don't settle. There'll be a house.
Yeah.
I know it can be frustrating that if you lose a deal, and you're willing to just throw money at it, or you're willing to waive a whole bunch of contingencies just to win the deal. In all circumstances, I can't say, you know, you do or don't do it, but it's not a good idea. There'll be another house.
Yeah.
You know, don't settle. That's my biggest,
it's a big commitment you're making.
Yeah, don't settle.
It's a big commitment. You really have to, you know, check everything, you know, cross all your I's, whatever they say.
Hey, cross the T's, dot the I's.
Yeah, cross
like
the
that.
T's, dot the I's.
It's just, yeah, don't settle, don't rush. There will be other properties.
Yep.
I
Anyways, Bill, if you don't already add, that's today's video. Like always, if you like this kind of content, do me a favor. Consider subscribing and hit the bell notification so you're notified next time we upload. It would be greatly appreciated. Thank you and have a great day.
See you next time.